We've been talking a lot about like the equity in the Bitcoin decoupling. One thing we could get into more is the Bitcoin and altcoin decoupling, because that I think there's more of a case for a decoupling narrative, because we did not get the alt season that we usually saw. And I think a lot of it has to do with the difference in the investment case for both. A lot of the value that's being generated on Ethereum, that's generating fees and bringing users, it's you're speculating on risky financial assets at the tail, and that's just not going to do that well in a bear market, in an equity bear market.
I think that's a good point.
Yeah, like it just doesn't have that store of value kind of self sovereignty, protect your purchasing power narrative that Bitcoin does. The rest of it.
It's becoming, I think, more well known that like altcoins shouldn't have the same narrative as Bitcoin.
Yeah.
It's just kind of a fundamentally different use case utility. So I think maybe that's, to your point, like what you're seeing there.
This is an excellent point, Mark. I think for us who have been in the industry for a while, it's pretty clear that Bitcoin is kind of a categorically different asset from pretty much everything else in crypto, I would say. This shouldn't come as a surprise for us. But I do think it's interesting to see that the broader market is realizing this. There's still
It's amazing, really. Yeah.
Correlations across crypto assets have historically been super high, right? So they've been like 0.8, 0.9, if not even higher than that. And I think we're starting to see some of those correlations coming off. And I think, honestly, this is good news for Bitcoin, and this is good news for alts as well, because folks are realizing, and I wouldn't even call like Ethereum, Solana alts, there's already majors, but let's say the non-Bitcoin complex. And I think this is good news for that part of the market as well, because folks are realizing that a smart contracting platform is something different than a non-sovereign immutable store of value. These networks were built differently for a reason. And I think that's actually good news. But yeah, I agree that perhaps part of this is that the value transfer mechanism or the wealth effect transfer mechanism is not the same as it was before, right? So like in the past, you would go from people who have Bitcoin on exchanges. Once Bitcoin takes off, they would look into what's next. And the most obvious choice would be to go to some non-Bitcoin crypto asset. Today, this link is much weaker because I think a lot of the inflows and a lot of what's driving the market is ETF flows. We just had, the day before we're recording this, on almost $1 billion day of ETF inflows, which is massive. That's like one day.
And second best day since January, I think, or best day since January, maybe.
Yeah, crazy, right?
Yeah.
And but that money doesn't flow through crypto exchanges and alts as easily, right? So you can even argue that there are things along the way, like ETF options or things like MicroStrategy or options related to that, way before anyone will probably consider moving their assets to a crypto exchange or even to a different asset class. So there's many different ways to play this high beta Bitcoin type of performance than in the past. So I think that might play into this a little bit as well. But of course, it's very interesting to see that Bitcoin has a differentiated investment thesis. It always had. And I think it's also great to see. The final thing I want to say about this is I still think that we're going to have an alt season. Sometimes I just worry that we are too stuck in the 4-year cycle. And then we're like, oh, wait, this should be the peak year. And then like next year is a down year. And I'm not sure. I don't think it's going to play out this way. I also think that one of the reasons why folks haven't moved from BTC to alts is that I think there's a broad realization that Bitcoin still has a lot of upside from here. If you talk to almost any kind of informed professional investor, they can easily see Bitcoin trading at 150 to 200K. So like that wouldn't scare them at all. That wouldn't sound crazy at all in an institutional crypto conversation. So I feel like we're kind of too early in the cycle for people to rotate out of Bitcoin into other things, regardless of all the points that we made previously. So I'm not as bearish as maybe some other folks are on the alt season. I just think it's pushed back. And I guess over the next year or so, we're going to see there's a bunch of interesting regulatory unlocks that we
Yeah,
might see that will
forthcoming.
favor alts, like the crypto
Mhm.
market structure bill. So there are
Yeah.
things coming down the pike that will benefit that market. I think there are certain parts of the market that we're going to see that already have product market fit and that we might see them taking off, like DeFi. So I still like alts. I just don't think now is the time from a pure like investment tactical perspective.
You're listening to CFB Talks Digital Assets, the home of informed conversation about crypto for institutions building the future of finance, presented by CF Benchmarks. Hey everybody, thanks for joining us for another episode of CFB Talks Digital Assets. I'm Ken O'Deleger, Head of Content, and as usual, I'm joined by my colleagues, Gabe Selby, who's Head of Research, and Mark Pilipchuk, who's our Research Analyst. Today, we're delighted to welcome back David Lawant, Head of Research at FalconX, for more exclusive insights from his unique vantage point as very probably the most influential crypto prime broker in the world. David, we're so stoked to have you back. Welcome aboard.
Thank you so much for having me back, Ken, Gabe, Mark. It's great to be here. And
Dave,
congrats for getting Mark's last name right in the first time.
I've had lots of practice.
Yeah. I can see you're getting much better at it. Yeah.
Try that. It's always a pleasure, David. And even more so when markets are as bonkers as they've been over, the last few weeks. It's coming up to a month and maybe a bit longer. As we're recording, markets are, of course, continuing to get some respite from fresh indications that the Fed chair, Jerome Powell, is not, in fact, in the firing line from the administration. Any sort of top of mind thoughts, hot takes on what we're seeing in the market over the last few days at all?
Yeah, I think it's definitely been a roller coaster. And the interesting thing is that there are so many foundational topics that are kind of changing back and then. It wasn't that hard to identify those topics, right? So Trump has been talking about reordering global trade since his campaign. I guess the surprising thing is that his measures were much more robust and they came much faster than anyone was expecting. I think for folks who also pay attention to the market, it's not entirely new that Trump is not a huge fan of central bank independence. Actually, if you read like takes from like modern central bank historians and folks who have been kind of telling the recent history of central banking, Trump's first term is widely regarded as the time when central bank independence started to falter. So he hasn't been a big fan of that for a while. I guess the thing is that these things are popping up in kind of unpredictable ways, and the news flow is changing so quickly that I think the market is being kind of caught off guard. You probably have some market structure issues, maybe those 0 day to expiration options. So there's probably like embedded leverage on both sides as well that probably exacerbate the moves. Here I'm talking about traditional markets. That I think, it's been interesting times. I think we're probably going to be chopping along for a while until we get a little bit more clarity. So like one day the market has this belief that the trade situation is going to be resolved rather quickly. And then the Secretary of Treasury, the excellent Bassett, I have to say this, I think his absolutely excellent and probably one of the best Treasury secretaries we had in a long time. But then sometimes he says something that might be not entirely aligned with that view and the market sells off, which is kind of what we are seeing today a little bit. So it's still kind of a very news flow, high frequency. I wouldn't even say high frequency data. It's more like high frequency tidbits, high frequency tweets, and narrative shifts. And I think we're going to be in this mood for a while. The interesting thing, and we can get to this, and we've spoken about it a little bit, is that throughout this process, I think that the investment case for Bitcoin is getting stronger and more tangible. I feel like it's getting easier to see why an investor, whether domestic or a global investor, might not want to have the dollar as his last line of defense. This is not to say that the dollar will collapse. This is not to say that the dollar will lose its reserve currency status. It's just saying that there is another line of defense that pretty much only two assets can fulfill. I would say gold and Bitcoin, with Bitcoin probably being the fastest horse, to use Paul Tudor Jones terminology. But I feel like, and maybe you guys will share this perception as well, there are certain things that would sound crazy to say in polite market conversations 4 to 5 years ago that right now are actually totally fine. And this is one of those, right? So the interesting thing is, I believe that the Bitcoin investment case is getting stronger here.
I'm just looking at the FalconX newsroom where you can catch all of David's awesome insights and his posts and research. The last post I see here is signal versus noise. What Bitcoin's move amid the market rout reveals. And at the bottom of that post, there's a nice sentence here I'll read to the audience. In a regime defined by fragmentation and policy whiplash, Bitcoin's relevance won't need to shout. It will speak for itself. That was written, I think you published it on April 7th. So you maybe have wrote it even before April 7th, or I'm not sure how fast you write to publish, but boy, I think that's really kind of stood the test of time as far as the dynamic that we're talking about earlier with Bitcoin's relative strength and how the world order is shifting to more maybe fragmented approaches. Do you want to highlight some other pieces or some insights that you had from that post that maybe have kind of aged well?
Yeah, sure. I think maybe I jumped the gun a little bit, but I was like extremely excited that Bitcoin was showing that beta lower than one behavior very early on. And I just went for it and I just wrote it.
Perfect.
I definitely took a risk that this would kind of, the dynamic would shift. But I feel like by then we had like a few days of Bitcoin's price action dynamic, and Bitcoin was showing this very strong resilience. I was like, okay, this is different. Bitcoin is performing way better than it should, even if it's correlated to broader risk assets. I guess the other thing that we highlighted there, and that is also interesting, and that has been different from previous rallies, is that the spot liquidity, it was very low compared to previous broad market sell-offs. So Bitcoin used to trade like way north of 20, 30, even $40 billion during these massive equity sell-off events. I think the weekend of the yen carry trade unwind was at the time Bitcoin's highest spot trading volume. We're probably talking about something north of $40 to $45 billion just in the spot market, depending on the exchanges you include here or not. During this most recent sell-off, we are seeing volumes at the $10 to $20 billion range. So it's like either half or even like 25% of what we used to see before. And part of that is explained by us, I think, coming into this event relatively deleveraged. So Bitcoin has been deleveraging and relatively kind of underperforming for a bit. So that speaks and probably explains part of it. But I think the other part of it is that I think a lot of folks who own Bitcoin are just comfortable with their BTC and they just don't want to sell it. They don't feel like selling it. To what we were discussing before, if you ask a traditional investor or like institutional crypto investor, like the perception on what a Bitcoin price target would be is way higher than what it is now. So I feel like it just didn't trade as much as it normally would. And the final thing I want to say, this is not in the note, but I think it's also interesting, is that we also saw a decoupling on the Coinbase premium. I like to track the Coinbase premium as like a proxy for maybe US general retail and then sometimes some corporate purchases. And
just,
I like
real quick, David, sorry to interrupt. Could you top level explain what you mean by the Coinbase premium?
Oh,
I
yeah,
know,
for
but
sure.
Yeah.
So the Coinbase premium is the difference between the, let's say, Bitcoin price or Ether price or Solana price, whatever asset. So let's use Bitcoin. So it's the difference between the Bitcoin price on Coinbase and the Bitcoin price on Binance. And usually those prices are very close to each other, but they're not exactly the same. There's usually a few basis points of difference one way or another. You have to do a few adjustments. You have to adjust for the stablecoin price, right, on Binance side of things. But when you account for all those things, these prices are not exactly the same. And when you have the Bitcoin price higher on Coinbase, it can probably mean, let's say that prices are going up, it probably means that the US is kind of leading on the price action side. If on the other side, let's say that prices are going down, and then you have the Coinbase premium negative, it probably also means that, like, let's say US domestic retail are leading or driving the buzz on this price action side. So depending on the relative pricing here between, let's say, Coinbase and Binance and where the market is going, you can make some high level inferences about who is driving the market price action here.
And so what was in this recent route, like, or in this period of uncertainty, you can't even really call it a route for Bitcoin, fortunately. Have you seen institutions leading the price, or is it retail? Is it domestic, or is it outside international participants? What are some
Really
of the
good question. Yeah.
It's a great question. I would probably say that retail drives the price more than institutions in crypto. It's relatively hard to have like hard data pointing to this because you have a lot of confounding factors, liquidity is fragmented, and you have a lot of delta neutral volume in crypto, right? So a lot of volume is just someone buying on one exchange, selling at another, or buying the spot, selling the future, or the other way around. So it's very hard to distinguish exactly what's going on. But I would say that my general perspective is that retail probably drives market price action more than institutional still, or has been doing this at least recently. And I will include the ETF flows here as retail. They're probably not entirely retail. I'm sure there's a good chunk of it that is financial advisor driven or institutional driven, but ETFs have been, I think, a big source of new capital into the space. So I would say probably institutional. And the other thing is, I believe that domestic is driving the buzz a little here, at least for Bitcoin. So if you look at this Coinbase premium, you're going to see that there is a positive premium on BTC, and it's not too different from the average. It's around one standard deviation above the average. So nothing too crazy, but definitely in positive territory. If you look at the same ratio for ETH and Solana, it's negative. Also not crazy. We're talking about one standard deviation, even maybe a little less on the negative side. But there's definitely been a divergence here. So like BTC, positive Coinbase premium, ETH and Solana, negative Coinbase premium. This is not, and this has been the case for a while, I would say, actually not too long, but probably a few weeks, like 4 to 6 weeks. And it's relatively rare for you to see these premiums detach from each other for this long of a period. So that's I think another interesting thing. And I think it shows demand for BTC from like the US domestic public, probably mostly driven by retail, but maybe also something coming from institutions as well.
That's interesting because Bitcoin kind of in the US, we've seen like this dynamic where the dollar has been weakening over the last few weeks, as well as the 10 years been shooting up, which really hasn't been that constructive for risk assets. Somebody from Bloomberg posted this quilt chart every year of what asset classes kind of return the best. And what I noticed was in years where we saw a lot of dollar weakness is when we saw equities outperform, we saw Bitcoin do well. This year, it's a little different, though. The dollar, we're down like 10% on the year. S&P's down 10%. So if you're a foreign investor, you're going to lose, you lose twice there. But also if you're a foreign investor, you can just kind of move your money into something that's denominated in your local currency, local equities. In the US, we don't really have that way to protect ourselves from the dollar's relative devaluation. And maybe Bitcoin's almost looking like an option to do that now.
That makes a ton of sense. I guess gold would fit the bill here very nicely.
Yeah,
and we're seeing
gold, Bitcoin. That's what's
some of it's spilling over to BTC. Yeah, that's great to see.
I think one interesting dynamic that's happening right now, and this is something that's happened historically. I'm going to put my old Wall Street investment strategist hat on, is that in periods of heightened volatility where you see the VIX rise significantly, and then you also see bond volatility rise significantly. So if we look at the VIX index, which measures a 30-day kind of like variance swap of the S&P 500, it's ranging between 30 and 50, right, on the index level. If you look at the MOVE index, which is the ICE BAML interest rate volatility index, it's also pretty elevated. And historically, what you find in those periods is that gold tends to catch a bid, right? And if we look at Bitcoin and its recent relative strength, I'm starting to connect the dots here, because we also measure the implied volatility of Bitcoin with our BVX index series that we have on CME Bitcoin options. And that has actually been absolutely steady throughout this period of uncertainty. So Bitcoin volatility, as measured, through the implied measure of option market participants on the CME, has actually not moved significantly, whereas the stock market implied volatility and the interest rate implied volatility has moved. And so it makes kind of sense that, in that type of dynamic, Bitcoin's actually kind of following gold's path now. It's becoming this alternative, this safe haven asset for geopolitical uncertainty. And it's something that we talked about in our outlook, where we were saying, as we kind of turn the page into this new equilibrium, that it would be fair to say that you're going to see heightened volatility across markets, which is, of course, is going to impact risk models for sophisticated investors. But overall, this could create a very favorable, long-term shift for Bitcoin and its dynamic and how the world views it. And so I'm like, it's got me a bit excited. And I think that, having this conversation with you, David, and the rest of us here, it's kind of like, I think things are starting to click here. So I think this is something that I'm going to continue to kind of follow along, is how does this relationship with gold play out? Where do these implied vol metrics, how do they trend? Does this kind of, shape the way of Bitcoin's path going forward?
This is an exceptional line of thinking, Gabe. I fully agree with you. Bitcoin's implied vols, at least the way I see it, I'm pretty sure the way you see it too, has been very flat. And I think it speaks a lot to this new regime. And I fully agree with everything you said. Perhaps one thing I would add that is very much to your point is that it's interesting that implied volatility has been relatively flat, but realized volatility has not. So we're not like in like previous environments, like when Bitcoin had very low realized volatility, right? So let's say when Bitcoin was stuck at the 60K level and it was just there feeling like a stable coin for months on end, that's usually when you saw implied volatilities also kind of low and flat. What we had this year that I think is interesting is that you have this dynamic of very flat and I would say low implied vols for BTC, but the realized vols are actually relatively high compared to what we're seeing on the implied side. So if you think about this, let's say implied to realized volatility spread, right? So looking at the implied volatility less the realized volatility, it's actually quite negative in a way that it hasn't been too many times in Bitcoin's history. So I feel like it's interesting to see that despite the relative kind of volatility that we saw in the price historically, investors are still kind of assuming that Bitcoin will have this perhaps more safe haven type of behavior in the future. So yeah, I just wanted to highlight the spread and the relationship between implied and realized vols that I think is also interesting. But yeah, fully agree with you. Very interesting times for BTC.
Yeah, and we're gonna hit on volatility trends a little bit more as we shift now to Ether, because as I wrote, last week, it seems to be having a bit of a moment. David, are you comfortable giving us a little bit of color? I mean, I think that's probably the most appropriate way of dealing with it, because obviously we saw CME Group launching only its third crypto asset set of contracts in the shape of Solana about a month ago, maybe a little bit more than a month ago, with Solana futures. And the first block trade was with FalconX and StoneX. So clearly there's usually a bit of a promotional aspect with the first block trades, but I wrote at the time, there's a little bit of a statement as well. So what would you like? Is there anything you can actually tell us about that block trade and what it might mean going forward for the kind of behavior that we might see in the market between such parties like FalconX and StoneX on Solana features?
Yeah, for sure. I think it highlights that there is institutional interest in Solana, which is a thing that a lot of folks were questioning, right? Because you have BTC with its obvious, very good kind of product market fit and narrative fit and investments portfolios. Going from that to ETH and from ETH to Solana is kind of a jump in the minds of many investors. I think it's interesting to see that these products, although being very different from BTC, non-sovereign store of value, they have also a pretty interesting use case and a pretty interesting value proposition on like this idea of like a smart contracting platform or a way to kind of transfer assets digitally native and in a very quick way. So I think it's very interesting to see that there's been interest on the Solana side. And there's a lot of interesting things happening on the Solana network itself. And obviously we've seen Solana gain a tremendous amount of mind share. You can actually literally measure that through data providers like Kaito. You can see how much mind share Solana has gained over the past many years. So I think it's very interesting to see that there is interest here. Of course, there's been a market shakeout since those products started listing, and we are in a different market environment. But I still think that you have a fair amount of institutional investors that are starting and trying to get sharper and more educated on the non-Bitcoin side of things. And I think Solana is definitely a major part of that.
I got some statistics here on the Solana futures since they launched in mid-March. So the notional volume has pretty much steadily increased, and this is from the CME's website. So mid-March, they're, let's just say, around like 10 to 20 million. Sounds right for the first day. It looks like if you combine the micro and the Sol futures, the standard contract, it just broke over 250 million in dollar notional. So yeah, it's the appetite is going strong. And Mark, actually, you've looked at some of the flows here for the Sol ETFs. Did you see anything over there?
It's been an impressive launch in Canada. So there were 4 Solana ETFs that launched in Canada, and it was last week. So it's the weekend before Easter, Good Friday. They're sitting on around they've raised over 100 million in assets in like a few days, the first few days of launch, which that's kind of a surprise. It was a surprise to me.
The appetite seems like it's there. Like there's and that is surprising, because I would say launching any sort of crypto related derivative or ETP in a trade war, if I had to put my money down, I would have been it would have been an uncertain bet. So
they had little choice though. I mean, it's such a long process.
I understand why they did it. I understand why they did it.
Oh, and the notable thing about the Solana ETFs is they have staking. They have staking in them. So that's exciting.
David, what is your take on that? Are you seeing in terms of interest? I mean, clearly it's not Bitcoin, it's not Ether, but how would you calibrate the interest that you're seeing in Solana? Any sort of product, could be OTC, could be the ETFs themselves, and or whatever.
Yeah, I think it depends a lot on the kind of client persona. I have to say that within the, let's say, more crypto native crowds, so let's say the hedge fund managers and the prop desks, Solana is very high up. We probably do more on Solana than on ETH today, like with this audience here. And we have been doing that for a while. So definitely, I would probably say that the second L1 in the space, if you ask a lot of those folks, is actually Solana and not ETH. Of course, there's a market cap gap, there's a volume gap, but there's a lot of excitement on Solana versus ETH. There are some perceptions that ETH is kind of starting to reach a turning point, a very slow turning point. There's some big changes there, but yeah, we can talk about that later. But I think at least on the short term, there's still a very strong perception on Solana. And then in terms of these more like structured or TradFi ways to invest, I think the numbers are great. And I do think also that these assets, they fit a different sleeve. They're probably like in the tech part of the portfolio, maybe early tech growth or pre-growth kind of stage, like pre-IPO type of investments in terms of return profile. So I definitely think it fits a different pocket, but I feel like there is some interest over there too.
So yeah, let's squarely move on to ETH now. So obviously the main inflection point here is that the SEC approved trading of ETH ETF options the other week. I think it's about a week ago. And, it's probably the biggest unlock that we've seen since the ETH ETFs were approved last July. So in terms of what you're seeing, David, in current demand versus, it's early days, obviously. So to the extent that you can actually answer this at all, current demand versus expectations, is that the right way of framing it, or maybe something entirely different you want to highlight?
I think on the East side, if you ask, like, let's say the more like crypto native folks, as I said, not a lot of them are excited about ETH in the short term. Some of them are excited in the long term. I think there's basically two groups of investors. One who thinks that Ethereum is kind of doomed and to failure, and we're going to continue to see that ETH BTC ratio trending down all the way. And there is that group. And those folks are usually very heavy on Solana, and they believe that Solana will take over the role that Ethereum traditionally had as the blockchain number two. There's another group of investors though, and I kind of fit into this group perhaps a little more, who thinks that Ethereum is not fundamentally flawed. It does have a number of things that it needs to fix. There's the question of value accrual. There's the question of alignment of interests between, or not alignment of interest, but perhaps like alignment of perspectives between the Ethereum Foundation and the developers and the users. So like Ethereum developing roadmaps that are more aligned with real world use cases and not like these super long-term research-based roadmaps. There's definitely a ton of questions around Ethereum. But I think this latter group of investors believe that Ethereum, all these things are fixable. The question is whether we're going to fix them on time or whether we're going to be too late, and maybe some other blockchain network, maybe Solana, maybe Sui, maybe another one will kind of take Ethereum's place. I think we've been seeing some very interesting turning points on Ethereum. For those who have been to ETH Denver, which is kind of a big Ethereum conference, I think it's one of the highest signal conferences for the Ethereum ecosystem here in the US. You can clearly start to see a changing vibe, in the sense that I feel like a lot of the people who are spearheading the Ethereum roadmap, I think they're listening a lot more to feedback from developers and from users. You have a few interesting developments like Mega ETH, which is this layer 2 real time, meaning very, very low latency layer 2, which can bring maybe a little bit more of those Solana vibes. You have the creation of Etherealize, which is kind of this institutional PR arm for Ethereum, with Danny Ryan, which is an extremely respected developer in the space. Some folks are excited about tokenization, and maybe some of that will happen through ETH, although it's kind of questionable how much of that value will flow to ETH, the asset. There are some folks excited about a potential DeFi renaissance, and ETH is still probably the place where, let's say, high ticket DeFi still happens. So there are things to be excited about on ETH. I think what this group struggles a little bit with is that none of these things will happen in the very short term. And during these market turmoil environments, people's investment horizon, they tend to shrink quite a bit. So folks tend to be a lot more tactical than they usually are. So that's where I think Ethereum is hitting a snag a little bit in terms of price performance. Definitely the development of ETF options is, I think, very much welcome. I'm very interested in seeing how these numbers will grow from here. They are still relatively low, but I think that's kind of totally fine given the market circumstances and how recent it has been. It's been very interesting to see how big the Bitcoin ETF options markets grew. So like I think IBIT options are now 50 to 60% of Deribit's BTC options in terms of open interest.
It's amazing.
A pretty strong number. It
Yeah.
grew, it got to there very fast and kind of stuck there, I feel like, but it's a very respectable performance. I'm not sure if Ethereum will follow the same path, but
Yeah.
I'm
Yeah.
very interested in seeing how it grows from here.
So, I mean, we had another Blue Sky question in the same theme, and I think you more or less pretty much answered. So clearly, a lot of people are looking at because there's a bit of a premium for ETH volatility, implied volatility relative to Bitcoin, and obviously has some upsides and downsides from the point of view of participants. But the speculation is, I guess, when you get this kind of event, will that premium, will that spread sort of compress? Clearly, from what you're saying, is way too early to think about that kind of thing. Or what do you think?
That's an interesting question. I would love to hear what Mark and Gabe think too. But I feel like Ethereum's implied volatility could structurally be higher than Bitcoin's just because of the profile of the asset. I feel like it's structurally a higher beta type asset than BTC, even if it hasn't behaved this way like consistently over time. I would expect Ethereum, it's just newer. There's just like a lot more unknowns and a lot more potential as well in some regards. So if I had to guess, I would bet that Ethereum's implied volatility would show at a premium to BTC most of the time. What do you guys think?
Yeah, I think so too. And I think that's going to kind of come from the way that we've seen ETH versus Bitcoin move over time. Like if we take a look at the ETH Bitcoin ratio, it's down only until it's not. So from January of 2018 until about December of 2020, it was pretty much a straight line down. Then you get about 10 weeks at 5X's.
Yeah.
Same thing happened in like kind of the 2016, 2017. You're going down. Suddenly you get 6 weeks, 5X's. So that's kind of like the perfect setup where you can, and if you look at Ethereum's vol surface, you can see there's that implied volatility at the top, kind of like Bitcoin. You almost don't need to own the underlying. If you're just buying out of the money call options and you wait for one of those big moves to happen, you can capture most of the return without the drag on performance for the 2.5 years it's going down. And this will work until it doesn't. Like until there's a structural shift to that large scale adoption of Ethereum, it can almost capture that narrative shift perfectly. So I think we'll probably see, higher vol on ETH for longer until there's something fundamental that changes.
In some ways, I think that like this could be framed in more of a market structure narrative because what we've seen with Bitcoin is a demand to kind of sell the volatility, right, of Bitcoin. And so naturally that kind of compresses the implied vol to some degree as you have strategies that try to harvest it. And now we're starting to see that, being kind of layered on top of Bitcoin proxies such as MicroStrategy. Jeff Park from Bitwise, I think there's like a short MicroStrategy put option or some sort of strategy that's basically harvesting implied vol on MicroStrategy options, right? Which is kind of like a layer on top of Bitcoin, right? So it will be interesting to see. I think for that to happen, Ether definitely doesn't have the same market structure as Bitcoin, right? So it's very possible that in that dynamic, naturally Ether could just have, a premium in that sense, because we're not seeing, the convertible bond market, demand Ether exposure, through convertible notes on, a holding company that's, basically holding a stockpile of Ether. And until we get there, those chain of events wouldn't, subsequently follow. So I think maybe from a market structure standpoint, that's what I would point to is seeing like how do we see, other tokens kind of fall into the MicroStrategy arbitrage of using non-recourse convertible debt to lever up an asset and then thus creating significant implied volatility on that underlying asset, which then creates, a demand to short that volatility and harvest out premium through that asset. So it's like a very stacked pyramid, if you can imagine that, but it's something that has yet to kind of happen in any other crypto. So that's something I'd point to. The other thing is, when we talk about Ethereum and its layer one use case versus Solana, I see the value accrual narrative being, kind of a valid thing to kind of question it from a ETH token holder perspective, but from a future standpoint of a comparative advantage to Solana, it's important to highlight the case study of the App Store versus the Google Play Store, and the way the layer twos have been able to kind of build, scale, and extract value using the Ethereum ecosystem, I think is very enticing for creating a layer one that it fosters kind of innovation and in a diversifying way, not so much just a meme coin way that Solana has seen so much, attention to. So I'm only bringing this up because, I think Solana definitely does have an edge right now. And like you said, David, the activity that you're seeing on your desk there, it seems like you're getting more Solana than you are getting any sort of Ether interest. But I just want to say, Ether's not dead yet. There's some hope here. It's got some things that are working to its advantage. And although things are certainly grim when you look at that Bitcoin ETH ratio, it's still important to highlight these other things as well.
Yeah, and also when it comes to an on-chain liquidity standpoint, I will say that ETH is miles better than Solana. Like I there's a reason I use Aave to do my borrowing and lending on ETH mainnet, just because the rates are going to be a lot more stable when you have a $30+ billion pool of assets. That there are no $30+ billion pools of assets on Solana right now. So until that happens, I'm going to be less worried that one's going to take over the other anytime soon.
So at the moment, I think the ratio between the assets, between the Bitcoin ETFs and the Ether ETFs, something like 10-1, obviously in favor of Bitcoin ETFs. Now, in your mind, what are your sort of high level scenarios or regimes that kind of begin to precipitate a change, obviously a bit more of a rebalancing in favor of Ether?
Yeah, it's interesting. But before the Ethereum ETF launched, I think I came up with an estimate of how much it could be as a percentage of BTC in terms of AUM. And I think the number we had was something like 13%, which is not very far from where we are.
Yeah.
But I think it will all depend on how the cycle will play. And I think, to Mark's point, I'm sure this number is going to be very volatile. And if we get to see an alt season, even if it doesn't look likely in the next or in the very short term, I think it's still very much in play in the medium or longer term. So if we get to see another alt season, this number can shift, I think, very dramatically. I will be interested in seeing how it behaves in this kind of new market structure that is perhaps more ETF driven than crypto exchange driven in terms of new capital coming to the space. But I wouldn't be surprised to see this number going up significantly if we get to see some sort of renaissance in the Ethereum ecosystem. I think, to Gabe's point, Ethereum has a lot going for it. It's still the home of DeFi, or at least, let's say, big D DeFi, like institutional DeFi. I think it's possible, and this is totally just a wish list from me, but I think it's possible that we might get to see some sort of regulatory unlock on the DeFi space later in this administration cycle. It's definitely not one of the first things they're looking at. There's still stablecoin bills. There's still the market structure bill. There's the Bitcoin strategic reserve. And I think this is probably something that would come after those things. But if it happens, I think it could be very interesting. So yeah, no, I agree that Ethereum is still probably the preferred network for institutions, right? So when you see like these new money market funds or like these kind of tokenization initiatives, Ethereum is probably the first network that comes to mind when you think about it. So it has a lot going for it. And I wouldn't be surprised to see this number reversing very quickly. I just don't think it's going to happen in the very short term.
So guys, let's move on. Top of mind, I think we want to talk about is the CFTC potential approval of perpetuals.
Yeah, I can kind of let you know kind of what I'm interested in and kind of want to get some of your views, David, on what this could do for the market structure. I mean, we've seen these perps in crypto markets in the rest of the world totally take over. I mean, if you look at the volumes on Binance and everything, this is the thing. This is the instrument to trade. So I'm kind of wondering, like, if we bring this to the US, are we going to start to see a shift in our market structure where we see maybe a move away from spot markets into more of this? Or are we going to see some activity change on the CME? Like, what does that look like?
I fully agree, Mark. I think this would be a very major shift in the crypto market structure in many ways. I was somewhat surprised to see. It does look like we're just at an initial discussion type of phase. It doesn't necessarily mean we're going to move forward with that. I would still be skeptical in prescribing very high chances of that happening, but it's definitely something I'm following very closely. And I actually said this just a couple of months ago. Folks were like, "Hey, how likely would it be to have crypto perps contracts in the US?" And I was like, "Man, I think that's relatively hard to see." Because in TradFi, there is a kind of an analogy to perps, which is the contract for difference. And you have that in
Interesting.
the future
Yeah,
side. And
yeah,
those
yeah.
things are forbidden in the US.
Yes, we have them in
They're
the
allowed in
UK.
Europe. They
Yep.
provide like also super high
Infamously. Yeah,
leverage.
yeah.
But in the US, they're not allowed. And there is differences between these contracts for difference and perps. I think a big one here is that these contract for differences, they trade on OTC, while
Yeah,
perps are
generally.
listed on exchanges. So you have much more transparency on prices and the order book and all these things. So there are certain differences that I think could make perps more palatable for the CFTC than this contract for difference. I was just going to guess that this would happen way further along the line and definitely not right now. I think it's very interesting to see the discussion starting. I think if we get a green light for perps in the US, this will materially shift the market structure of the market in favor of the US. A lot of the crypto spot volume happens offshore, right? Even in the spot market, 85% of the volume is offshore. In the futures market, it's even more. It's like 95% plus of the volume, notional volume, happens offshore. But the interesting thing is that most of the trading happens during US hours. So the thing is, the US is still very central to what's going on in the market, especially in moments like now, right? So when you have like whatever Powell or Besant or Trump or Lutnick is saying has this major impact in the market, these are especially the times. But even then, traditionally the US, and this has been something for like maybe a year and a half or 2 years, the majority of the trading happens during US hours. So the US has this centrality in terms of just like market action. And of course, you have all the kind of safety and like established principles in US capital markets that could be appealing to many people. So I think it would be a good thing for the US to see more of the crypto trading happening onshore, right? We talk a lot about, I think Trump said, let's make all the Bitcoins in the US and like putting the US as the center for this asset class and for this technology. And I think part of that means that more of the trading should happen onshore. And I think this is one initiative that would very much go along these lines. So I very much welcome it. But yeah, very interested to see. I think this is being a little bit overlooked by the crypto market, or at least the crypto Twitter people, because I don't think everyone understands how big this could be and how important this change could be.
Amazing. So, chaps, I think we should now progress to the final section. And traditionally, this is one that Gabe usually opens, and it's about sort of the outlook, whether that's on a corporate level or whether that's on a market level. So take it away, Gabe.
Well, I think for this episode, it might be good to do a round of predictions. Would that be fun? I mean, what better time to put our our faces and our voices on recording and
Exactly. Yeah.
and throw some predictions out there in probably what I would consider the most uncertain, market we've had, or, not only market, but just macroeconomic environment we've had
Yeah.
since probably COVID. To be fair, COVID was very uncertain. Not very many of us knew what was going to happen, how long, these things, these changes would last, and what the new normal would look like. Certainly, we're kind of just heading towards perhaps a new normal or not.
Yeah.
But I think, and since I'm proposing this, I'll go ahead and start and maybe give my prediction on how things could happen. So I predict, and of course this is just for fun. So if you're listening, this is not investment advice, and then do not take this, to heart. But as a group of folks here, just having fun on a podcast, I do predict that Bitcoin is going to continue to show relative strength and reclaim the lead year to date against gold, which has, I think, opened up a pretty sizable gap, since the start of the year as gold continues to rise. But I think Bitcoin is going to catch a second one here. And that is likely due to just continued institutional interest, continued adoption here in the US with the ETF flows. Mark and I highlighted in our outlook that we expect, this to be even a banner year. So a bigger year and a banner year for Bitcoin ETF flows. So I think that the current backdrop is actually going to end up being very conducive to that type of investor appetite. And so, yeah, my prediction is not only just that Bitcoin will reclaim its year-to-date lead on gold before year end, but also that the fund flows will continue to pick up here and will outpace last year's record-breaking, you could say, neck snapping ETF flows. So who wants to go next?
There's no way.
Right.
There's no way I'm going before David. That's all I know.
Okay, I'll give you one here. All right, this one's a hot take here, but I think that the altcoin market, the bottom is just about in, and my rationale is I think if we haven't reached peak uncertainty, we're in peak uncertainty now. We're starting to see kind of where the levels are that the administration starts to maybe take a pause or think about things differently, or we've seen kind of the levels where the Fed's going to come out and talk. So we have an idea of, we know what they're looking at. So we have an idea of what type of response might be coming. So I think that just knowing that they're going to do something, that should be enough to keep us from getting more uncertain.
Yeah. And David?
Wow, these are very bold predictions. Let me see what I can come up with. And then again, no investment recommendation or not anything. I think
it could be a regulatory one too. So I don't want to pigeonhole you to a market one.
There's so many drivers, potential drivers, right?
I think on the Bitcoin side of things, the way I'm thinking about it is that I think once the cycle is fully developed, we're going to see Bitcoin's market share relative to gold in terms of market cap to move from 1 digit, which is where it is today, 1 digit percentage, to mid to high teens. I think that's where I think we're going to be in the next cycle, which means a significant upside. And if I might add another one, it's kind of a wish list, but maybe something that I not only hope will happen, but think will happen, is that I think we're going to see some sort of DeFi renaissance in the next 12 to 24 months.
I like that.
Right. I love those predictions. And but as the non-practitioner member of this conversation, the only thing that I can look at is, crude fundamentals. And I think probably the most obvious fundamental right now is geopolitics and politics, certainly US politics, right? But the impression that I get from the last few weeks, few days even, is that the center is beginning to hold. The chair of the central bank has basically come out as the adult in the room, and, we have the president going, on the record to say that, in fact, he does not have the power to fire, essentially. He's saying he has no intention, but I read that as basically an admission that he does not have the power to fire the chair of the central bank. And probably the most biggest sign of stability that you're going to get, certainly from markets, maybe not so much politically so far this year. So I believe that the center will hold, and that's the first instance of it. And so therefore my Bitcoin price prediction is going to be north of 100. I'll probably conservatively 110, 120, but I think we could see 150 by the end of the year.
I like it. These
Awesome.
are,
That's
I like
right.
you guys also kind of, we're all on the same team here. So not directly
Pretty
like with the same call outs, but very similar, gold Bitcoin ratio, gold relative outperformance, and also
Yeah.
a 150 Bitcoin. Very, very good predictions, gentlemen. Well, with that, I think we can wrap things up, right? Officially. So thank you, David,
Yeah.
for coming on. And Ken, do you want to do the
Yeah. Well, I
sign
mean, I
off?
will ask David, not just out of courtesy, just curiosity. Is there anything else that you wanted to add that can be on the market level? It could be on the corporate level. I'd love to hear if there's anything new that FalconX is actually going to instigate over the course of the year that you'd like to air now. That would be great as well. But, markets wise, outlook wise, geopolitically, whatever, is there anything else you wanted to add?
Man, I think we covered a lot of ground
We did.
on the markets. In terms of FalconX, I mean, we remain extremely excited about how the market structure is maturing and the role that prime brokers can serve. We remain focused on the same things like trading. Credit is a big one. I think this is a link that is going to get stronger, the link between TradFi and crypto, and these rails getting more connected with the regulatory opening that we're seeing. I think there's probably room for a new and more sustainable upcycle on the credit side of things.
Good
This
point.
is one thing I'm very excited about, and then risk management. So I feel like it's still kind of the same, but we're very excited to see this market structure maturing and the role of prime brokers getting more and more clear to many investors.
Yeah. And I just want to say, while you're still on, David, to our audience, you owe it to yourself to navigate to falconx.io/newsroom, where you can find all of David's thoughts, past and present and future. And you will actually, sort of improve your game by a number of X by doing so. So that's one thing that definitely I'd recommend. And just apart from that, obviously, David, it's always a massive pleasure, and we always learn so much. So really massive thanks for coming on board again.
Thank you, folks. Always great chatting. We should do this again. I love doing this.
Yeah, we will.
Very
We will.
insightful and pleasant conversations. So you guys have a good one.
Brilliant. Guys, I think you'll agree that was awesome. If you enjoyed the podcast, wherever you get your podcast, that's where you need to navigate to find all of the rest of our episodes. For the rest of our general content, cfbenchmarks.com is where you need to go. And after all that, we'll see you again for another episode of CFB Talks Digital Assets. Thanks for joining.
Thank you for listening to CFB Talks Digital Assets. This recording is for informational purposes only and should not be considered investment advice. This recording is not intended to persuade or incite you to buy or sell any financial products noted within, including but not limited to exchange-traded funds, mutual funds, equities, other instruments that reference any index provided by CF Benchmarks Limited, or crypto assets. Any commentary, interviews, and discussions are opinions only and should not be considered a personalized recommendation. Please contact your financial advisor or professional before making an investment decision. Note, some of the underlying instruments cited within this recording may be restricted to certain customer categories in certain jurisdictions.